is only on that 4,000. Now, here at the Public Workers Credit Union, you have set payments based on your limit. Your limit is 3%. Your repayment, monthly repayment is 3% of what your limit is. So that's a $300 payment, and that is fixed. Similar to line of credit, but not the same thing in that with the credit card, your repayment or minimum payment is based on what you have drawn down. Now, the rate of interest on a credit card could range from 20% as high as probably about 24%. Our interest rate on our line of credit is 16.5%. So $300 fixed every month. It doesn't change because your limit is 10,000. So depending on if you max it up to the top, which according to Jason, you should not be doing, keep it less than 60% at points in time, but you still have to pay the $300 on a monthly basis. I hope that satisfies the question.
Okay, I think it does. Tatiana is asking, what role does Sagicor Life play in the credit score?
All right, Jason, take that one.
Sagicor Life is one of our subscribers. They specialize in mortgages, so the contracts that they share will have the same impact on your score as any other loan from any other institution.
Okay. And who can be a subscriber to the Bureau? Are all companies eligible once they subscribe? Are there types of businesses that are not eligible?
Well, any subscriber there, for example, you can have non-financial entities. For like a real estate company can decide it wants to become a subscriber because you want to vet individuals who you are selling villas or properties to, or they may have rental arrangements and you want to vet the individuals. That entity can become a subscriber. However, as I said, pulling the report on any individual that applies to them for whatever business they're seeking to do still requires the consent of the individual. So it can be, I've had discussions as well and ongoing discussions right now with debt collection agencies that want to become subscribers. And there are other entities as well that are contemplating who are in perhaps construction. I've had discussions with membership shopping entities as well. So yes, the sectors or the types of businesses that can become subscribers is far and wide. Is not just limited to lending institutions, but institutions where organizations who, because of the line of business that they're in, they may need to vet an individual for whatever reason in order to be conducting business or for discussions to advance.
Okay. Thank you. This one is not a question. It says, but as a young person, I want to share my gratitude for such an informative session and on understanding how the credit rating works. Thought I'd share that one because yes, I'm happy to hear that we have a young person here in the chat who has benefited from the information shared. I am going to allow, we have a raised hand. Let me find that person in the, right? And I'm going to allow Chetwin to speak. Go ahead, Chetwin.
Hello?
Hello.
Hi, good evening.
Yes, sir.
If
Good evening.
if you have gone past, say you had contracts with the institution and you have went past the 7-year term for whatever reason, and you plan to get back on track, or you find yourself in a better position, what can you do to obviously your rating will probably be low, but what can you do to get yourself back on track in terms of that?
So when you mean on track, you're suggesting that you had a facility that was written off?
Yes, yes, sort of,
Like,
and suppose that entity reached back out to me by via letter or something like that.
right. So
Um,
there's two types of written off, Chetwin. It can be closed and written off, which will hurt your credit score. But there's also open and written off, which means they've written it off theoretically, but they're still attempting to recover those funds. And that is the most painful form of writing off a facility. So it will stay on the credit report and stay on the credit report because it is still open. So to answer then the second part of the question in terms of something that is closed and written off and has gone past 7 years, I would advise you that barring a situation where perhaps, let's say you have lost your job, Philip would touch on it as well, where maybe your life has been set up because you've had two outcomes in the home and it then has been reduced to one. You need to pay your bills on time, pay your installments in full. Do not find yourself in a situation where you have an amount due past 30 days. Do not allow outstanding balance collectively to go past $2,000. Do not find yourself signing to be a guarantor on any contracts for individuals that you know are not disciplined individuals that you can close your eyes with some level of confidence and know they're going to pay their fares and not put you in a difficult situation to take on a loan that you essentially signed as a godparent for. So, and also have a plan, have a plan, next year or the year after you're looking to add something else to the farm, you're looking to expand the field to grow more crops, and you might have to buy a piece of equipment, borrow money with a plan, and to be strategic about how you do it, and use credit cards and those things wisely, and try not to live off the credit card where the balance is maxed out all the time, and you become you're at the mercy now of your credit card balance, and you have to budget for that like any other bill in the home. Those are the types of pointers that I would give an individual, right?
Thank you. Thank you.
Comes down to discipline.
Mr. Holder?
Hi.
Yeah, it's Mr. Bob. Now, you said your question indicated that 7 years has passed, right?
Yes, sir.
Right. Now, Jason mentioned written off and open.
Right.
Right. Now, it would mean the institution has the right to still pursue the debt. So even though the 7 years has passed, you're still in a very negative position. And it would also mean that you will incur greater expense in trying to repay this loan if you're at this point, because it would mean that this account, this facility, this loan is now placed in the hands of an attorney who now can pursue the matter in court, which is an added expense on top of what your outstanding balance is. So that's, Jason mentioned it. It means don't reach that stage where it has gone to that level or sunk to that level, because your credit worthiness out there is worse than it should be. It's at that point in time that you really need to reach out and find and make arrangement, agreement, which will then definitely improve, because once you've shown the capacity to do something, that will start to rebuild your credit worthiness out there. But you don't want to reach the stage of that written off point.
So once you start to repay, the score will eventually increase.
It will.
Yeah, it will over time.
It will take some time to recover. I've seen cases where people may have balances outstanding for 500 days, 700 days. It will take some time to heal. So if I may speak frankly, gone are the days where you have a facility, a credit card, a loan, you haven't paid it off, it had $4,000 left on it, and you know, not speaking to you directly, Mr. or Mrs. Hall, if I may, but speaking to a situation. You're stooped, and so eventually the institution can write it off and they can get a clean slate and they can move forward. No, because that written off status will hurt you. And as I said, if the institution, as Philip mentioned, is still pursuing the matter, it can remain open and written off, which means that the likelihood of your score being 250 is real. And there are not many institutions, and every institution has their own way of approving or dealing with their potential clients or clients. There's few institutions that will allow you to borrow with a score of 250. Now, just a last piece of information, what we've recognized at the Bureau is that steadily over a period of time, since we started here, we recognize that non-performing loans have been gradually on the decline. Why? Because when an institution, when there's an outstanding balance in the institution and they're reporting, they're sharing data with the Bureau, you're unable to get that mortgage, you're unable to get that car loan unless you go and settle that balance with whatever institution you had that particular facility with before the conversation can go any further. So I urge everyone on the call, if perhaps that might have been your attitude in the past where you believe the institution will forget about it and write it off, and you get a clean slate and you start a fresh discussion, it affects how the institution views you as an individual, because there's a trust element. The institution has to manage their risk. And as I said, that is the one term on a credit report that will cause an institution to really start now to peel away at your credit report to see what is going on with you, and can affect your terms and rates and limits and things of that nature. So I just wanted to put that in there as well as supporting information. I don't know if Philip
Okay,
may
thank you
have
very much.
more to add. Yes, Mr. Holder. I don't know if you have anything to cap it off.
Well, this is what I will say. Here at the Barbados Public Workers Cooperative Credit Union Limited, we have a responsibility to the membership, and that extends to good credit and bad credit. Where bad credit is concerned, which will hurt the organization because it speaks to solvency or insolvency. For those good paying members, in terms of what their return is, if we have large number of persons who have bad credit, then those good paying members will say to us, well, what are you doing? Because you allow these people to come and borrow, and they're hurting us in terms of their dividends, their interest rebates, that type of thing. Because then when it comes down to the end financial year, where we would say to the membership, look, we have performed X, but because of these bad loans, we have to provide an amount to cover the write-off of them. Now, the write-off will be putting money aside in the event that, and the time it takes to collect the money. Okay, so that's our responsibility to keep good records, practice good financial management to all those who pay well. So that's why then we will go to the point of placing those accounts in the court system and the attorneys to pursue the matters. And your borrowing at the credit union may become zero. Your borrowing on the outside may be less than zero. So you don't want to reach that point. But we have facilities where we have beefed up our capacity to restructure those loans. So as I would have said earlier, we no longer wait for you to come, but we will reach out to you and say, look, hey, this is what we can do for you. Let us have that conversation and we start the ball rolling. So we want to get everybody back to good standing, because it's not only helps you, it helps us. And that's our responsibility to you, our members. Okay? Thanks.
Okay, we need to wrap up in a very few minutes, just about 5 minutes or so. But there are two hands. Well, I thought there were somebody lowered their hand apparently. Can't remember whose hand it was that was raised, but the hand was just lowered. Nonetheless, we have, right, Tanya. Tanya, can you go ahead and ask your question?
Hi, thank you so much for having this session. It was great. I have many questions, but I'll just try to ask the most important. So I would have asked a question about prepaying your mortgage, but I would like to apply that question to any type of credit. So for example, the same utilities bills or any kind of unsecured loan, any type of credit, is there any benefit to prepaying? Does it kind of, I guess, in your algorithm or your model, does it work in the reverse of default payments, if that makes sense to you? As in, does it add to the...
No. It looks at your payment history, full stop. So you're paying on time, you're paying in full. If your installment is $600 and you pay $800, it looks that you've paid your installment. It doesn't reward you for, I guess, lack of a better term, good behavior, but you're given points for behaving in a manner that is consistent with those areas that we spoke about: paying on time and paying in full, reducing obligation, etc., etc. So, I don't want to say brownie points, but I think you get my point.
No, just asking because so for persons who may have had an incident in the past and they're looking, and it takes 7 years for that to be removed, you might want to show, hey, that was just one part of my story, or that was a specific incident that happened, I don't know, COVID, whatever. And you might want to then show, hey, I'm a capable and a disciplined person. That is that not something that should be considered, I mean, going forward?
Yeah, but the beauty about our report is that it will give the lender a snapshot for the last 12 months. So they can see how you've been paying that particular facility over time. You've been paying it in full. How they view how much beyond the installment you've been paying, the institution would have to speak to that directly. But for us, the algorithm will read that the installment has been paid, it has been paid on time, and it will gain the same, it will be treated in the same manner as if the installment was $500 and you paid exactly $500.
Gotcha. And very, very quick,
Right.
I know one person
And
mentioned...
secondly, the utilities companies are not yet sharing data. I know that was a part of your questioning initially, but go ahead.
Okay, so for those who don't want to use credit going forward, there is no way to kind of sustain just a good credit score without having to go out and take a loan or a credit card.
No, because as I said, payment history is what the system uses to generate a score. So if you have no facilities in the environment, the system will not generate a report for you at all. Or you have had facilities in the environment, but you have had nothing active for the last 6 months, it will generate a report but it will not generate a score because
Oh,
the score is a summary of a behavior over a period of time,
gotcha. Okay.
right?
Thank you.
So the beauty about the report is that even if no score is generated, historical snapshot of your payment behavior for the last 12 months, or the institution can look at any facilities that you had closed beyond 6 months ago and still be able to look and see your credit worthiness and how you were managing your affairs when they were still open. So there's still hope. They can still come to a summary, a perspective of the type of individual you are at managing credit.
Okay, thank you.
Tanya?
Hi,
Tanya?
hi, still here.
Yeah. Now, those lump sum payments or excess payments that you're making, one of the benefits would be, let's say this is a loan at this credit union. The benefit of that is that over time you pay less interest. So I can say to you, for example, that your loan of 5,000, if you with the stipulated payment over a 5-year period, maybe is $130. The interest that you will pay over that 5-year period is, for example, $1,000. But if you decide you're going to pay an extra $100, then it will not, you will pay off the loan quicker. And instead of paying $1,000 in interest, you may only pay $500 in interest. So that's a benefit in terms for you on the loan, because our loans are calculated on the reducing balance. Interest is charged on the reducing balance. But it wouldn't say affect your score, but it would reduce the amount of interest collected from you. You pay off the loan faster in a shorter period of time. Now, internally, and I think we mentioned before, when you pay in excess of the stipulated payment, the particular institution will see it on a case-by-case basis, as you can say, to determine now how they will rate you internally as a premium customer or quote unquote average customer. But the credit score in itself will not be affected. Got it?
Gotcha. Got it.
All right. Good.
Thank you very much.
You're welcome.
Okay, we just have one last hand raised. Miss Daniel, can you ask your question? And after that, we will wrap this session up.
Okay, in terms of the tips that were given to improve your credit history, would those tips be the same in terms of persons who are contract who'd like to look more favorable to financial institutions?
In general, those are
time?
for all, for everybody.
Is there anything specifically that you would advise someone who's on contract? We know a lot of people are on contract these days.
You mean on contract? You mean the way that your employment is set up? That's what you're referring to?
Yes.
Oh, the credit reporting system doesn't look at how your employment is set up. It deals with payment history and your credit history and utilizations. I'll hand over to Philip, who will be able to speak on that.
Right. You were saying the financial institutions see it differently.
Yes. In terms of lending, and not necessarily say credit scores. Now, if you're a permanent employee, institution will look at that more favorably than a contract worker. Now, and that's on the face of it. With contract workers, there's a specific time that contract is in place for. So what most institutions will say, well, we could only lend you this amount, but it must be repaid. So you're a contract for 1 year, it must be repaid in 11 months, as opposed to a permanent person getting 3 years or 2 years or 5 years. But credit score remains the same based on your repayment history and your credit behavior. But in terms of lending, the institution will determine now if they will lend to you based on your employment status and how much and for how long. Now, if you previously had a good repayment history with the institution, and you're on and you have been on contract for a period of time, that's what will be used as the assessment on you. So it will be done on a case-by-case basis. Daniel, you there?
Yes, much. Thank you.
Okay.
Okay. All right. Thank you, gentlemen. Thank you, participants. I mean, you have been a really engaging audience. There's just one more question that I am going to allow at this point. If a person has an overseas credit history, can that be supplied to use to a local institution to help build a credit score or rating?
Using a credit report from another jurisdiction, the decision to lend is that of the institution. What I will say is that if you were living in Jamaica, Guyana, or one of the ECCU territories that I showed on the map at the outset, the credit reporting system that they're using, the method by which the scores are calculated is the same as Barbados. We don't do cross-border reporting, but let's say you came from Antigua and you had facilities there, you can get them to print your credit report, but whether the credit report is going to be used to approve or deny the loan, the discretion falls on the institution.
Okay. All right. Thank you very much, Jason. Thank you, Philip. And thank you, Christian, for assisting with the Q&A. This has been an excellent session, in my opinion, and based on some of the feedback we've received, our participants are totally in agreement. So thank you very much for taking the time to explain the intricacies of credit scores and credit score management and all matters that are related to being efficient borrowers and managing credit. As a reminder, we'll be doing a random draw for 4 complimentary full credit score reports from today's attendees list, and the winners will be notified via email. We encourage you to follow up with our BPW CCUL team via submission of your queries to marketing@bpwccul.bb for any further queries or any questions that you felt remained unanswered. On behalf of the Barbados Public Workers Credit Union team, as well as our panelists, thank you again for being a part of this important conversation. Have a great evening and take the next step forward to unlocking your credit scores. Have a great one, everyone. Thank you for joining us.
Thank you as well.
Thank you.